So, hello and welcome to the new episode of Dealroom video podcast, the show in which we discuss topics that are important for the tech ecosystem, supported by data. And today we have two great guests to the show, Saul Klein and Constantijn van Oranje. I really don't want it to sound like a panel at a conference, so let me just do a really quick introduction for everyone here. So, Saul Klein, investor, operator, co-founder of Phoenix Court and the advisor for UK government in different capabilities, I suppose. So we're going to touch upon it a bit later. Constantijn van Oranje, the envoy at Techleap.nl, and I believe you're also involved in advising the Dutch government on innovation and technology, right?
Yeah, sometimes if they listen.
And yes, and of course we have, Orla Browne, the head of insights at Dealroom, to help us make sense of the Dealroom data that we are using to support this discussion. And the topic of today is the tech sovereignty, tech autonomy, and how do we actually create it, and where we as in the European technology ecosystem. So how do we actually define tech autonomy, and why is it important? Can we have a little bit of a round to explain that? Orla, can we start with you?
Yeah, so we're talking about the sort of indigenous technology ecosystem that we have in Europe or in each of our own countries, and the important capabilities that enables society to do, and also how those are built and where the capital comes from to build those things. So I think it's with geopolitical changes and uncertainty, it's become a hot topic.
Right. So is it something that you have been thinking about for a while, or is it something that's quite recent in your opinion?
It's something I've been thinking about for a while. It started in 2021 when I've been on the Prime Minister's Council for Science and Technology now for 5 years. So that means 4 prime ministers, 6 chancellors.
That's only 1 year, right?
Well, just in the 5 years, but we're getting a little bit more stable in the UK. But I led some advice in 2021 on how to unlock capital at scale in the UK ecosystem. And one of the things that we came across was that, while the UK has been very, very good at producing innovative companies, when they get to the scale-up stage, less than 15 to 20% of the capital was domestic. Mm-hmm. And so, the sort of the framing I offered to the Prime Minister and the Chancellor at the time was, the UK is very good at creating an engine. We can put an engine on a plane, but when the plane's ready to take off and fly around the world, we'll only be prepared to pay for 15 to 20% of the fuel. So the plane gets fuel, but the economic beneficiaries of the flight then are the Singapore metro system, a teacher in Ontario, a Danish nurse, the Saudi royal family, you name your list. So when I think about economic security, it's not just about the critical technologies. It's actually about, do citizens and savers in the UK, in the Netherlands, in France, in Germany benefit from the innovation that's happening in their country? And they obviously only really benefit economically if the people who are allocating capital on their behalf, pension funds, insurance companies, or the state, are active investors in their innovation economies. So to me, it's something I've been really working on for 4 or 5 years now, with a focus on, when we succeed, by we, UK, Europe, etc., are we actually economically benefiting?
Yeah, absolutely. Constantijn, for you?
Well, I'd like to add to that, of course, that's the financial benefit. And still, we've been seeing this now for years, that most of the capital is coming from US funds or from outside of the Netherlands. You benefit a lot. I mean, you're creating new jobs, you're creating ecosystems. Companies like ASML, they are mostly capitalized also with foreign capital, not in the early stages, by the way. But so you benefit anyway. So of course you want much more of your of your own capital, because that means that you're going to get a return, a fiscal return. You're going to get a much stronger ecosystem. Because more people are going to get wealthy, more people are able to reinvest capital. So you get a much more self-sustaining ecosystem going if that happens. So it is definitely something you'd aspire to. But the second best is that at least you get your companies capitalized.
Yeah.
But the whole concept of technology, autonomy, I find, I came across it a few years ago. And it has different angles. One is a very political one, which I don't particularly like, because I think it's not actually true that we can actually be completely independent of China or of, we have global supply chains and they will exist, and we know we are dependent. We can't just bring TSMC to the Netherlands and hope that they can produce here. There's a whole ecosystem that comes with it. So that kind of independence that our politicians talk about, I think, is a bit smokes and mirrors. But we use it as well, because you want to get politicians involved, and then they, if it's about the fear of being too dependent on some other geography that is maybe politically not 100% aligned, then of course politically that's understandable. I think COVID made very clear how dependent we can be. So there's another thing about robustness of your supply chains. So you do want to make sure that you're not 100% dependent on very complex supply chains, where a few of the actors might be in countries that are not that won't be delivering for political reasons or other reasons. So that's another way. You want more resilience there. And then a third part is, what of the technology you want to be able to control. So is it fine that we have no cloud providers? Is it fine that we have no chips producers? Of course, we've got NXP and we've got Bosch and a few, but none of the really last generation chips are actually designed and produced here, except for ARM. But ARM is also kind of mostly Japanese. So, and that's also kind of a political question. But we could fare pretty well as an economy if we don't produce our own chips.
Sure.
But of course, if you want to have more control over your destiny, it is something you do want to, you do aspire to.
Yes, indeed. So this is something that we're going to discuss throughout this conversation today, I think. And as we lay some groundwork, I also wanted to mention this interesting concept that we've been talking about for a while, which is the new Palo Alto. Orla, as a Dealroom representative, can you talk about it?
Yeah, sure. It's actually something that we've done a lot of work with Saul on over the years. But New Palo Alto is this idea that we talk about the Bay Area or Silicon Valley as being this one hub, one ecosystem. It's actually a pretty large area, and it can take quite a long time to get from one end of the valley to the other. But people experience it and work in it as one ecosystem. And we thought, well, what if we were to do that, try to think of an area in Europe in the same kind of way? Because yes, there are some borders, but actually it doesn't take that long to get between a lot of these amazing hubs that we already have here. So we drew this 5-hour by train ring around London. So London being the center of the sort of biggest tech hub in Europe. Specifically, we were doing it from King's Cross because there's a lot of trains that go from there. So it gets us.
And our trains are a bit faster than in the valley.
Yeah, that too.
Oh, yeah.
A lot.
But yeah, from
there we have strategic advantage.
There we go.
Exactly. We've got some existing infrastructure. But yeah, with on the Eurostar, you can get to Amsterdam in 4 hours. Obviously Paris as well, and Brussels. You can include Edinburgh, Glasgow, Oxford, Cambridge, Manchester, Bristol, Eindhoven, all of these other places in between that, like, if you think about that as one ecosystem, wow, that's actually pretty impressive. And it's an idea that we kind of want. It's a bit of a mindset change, basically. Like doing that kind of a journey in the US, you wouldn't bat an eyelid, whereas we think that's a really long way, and it's actually not. You can get there and back in a day if you want to.
No, I agree. And about New Palo Alto, I think in one of your recent interviews, so you mentioned that we're building a new Palo Alto, which doesn't mean the same Palo Alto, but a very different Palo Alto. So what's different about New Palo Alto?
So yeah, I mean, for me, the framing was really not just about proximity, and I think we'll go on to the data that underlies why this is a very powerful supercluster that one can use in the same breath as the Bay Area. But I think, having worked my first professional decade in my 20s was, in all of the nodes of Silicon Valley, spin out from MIT, Microsoft, obviously spending a lot of time in Palo Alto in the early days of Netscape and search engines, etc. 35 years later, obviously the economic output of Silicon Valley has been extraordinary. But whether they were intended or the unintended consequences of that innovation has also been extraordinary and not always positive. And so, when we talk about a new Palo Alto, it's not just a great innovation cluster or the next Palo Alto. It's a different Palo Alto built on a set of values that is sort of more human first, and is really thinking about, what are the social as well as the economic consequences of innovation. And that's something that we spend a lot of time thinking about, is building much more sustainable, long-term innovation systems.
And are these values, do you believe, are more inherent to Europe?
I don't think they are just inherent to Europe, but I think, Europe does definitely exhibit many of these values. I've actually spent a lot of time in the last year and a half in Asia, and I think a lot of these values are very, present, maybe even more so in Japan, in Korea, in Singapore, in India. And I would characterize one of the core values as long-term thinking. Mm-hmm. Another value which is allied to long-term thinking is sustainability. I know that's like a really unpopular term since last November in the US. But I think, these are values that obviously like Europe excels in. We're in a city today like London, like Paris, that is, hundreds of years old. A lot of the relationships between these cities are thousands of years old. And the culture and the mindset that we are built on is you measure in the centuries and the millennia, not in the weeks, the months, and the quarters. And I think, if technology and innovation is going to mean something, which it does, it should mean something to people, not just to investors.
Absolutely, Constantijn. So, would you say as well that tech sovereignty, tech autonomy within this new Palo Alto area would work for the Netherlands, for example, or do you feel that the country is more focused on tech sovereignty within its own borders?
No, it's Europe. So UK will be a bit of an issue now with Brexit. Of course, we are very close to the UK traditionally. So if you look at the financial sector, Amsterdam and London, I mean, I don't think there are more places, more connected places than those two in terms of number of flights. And I know people that worked at TomTom and they went to London and then they were working in Amsterdam and then they went back to Amsterdam and they were working in London. So that you can do it. I didn't think of this concept, so I just look at it. So how does it work? Does it work in terms of communication? And we tried the west coast of Europe as one. So Palo Alto kind of sounds, it's quite familiar. And I'm just listening to what Saul is saying about some of the underlying ideas. I think what you can do we could do much more, and to kind of play with this idea that proximity is different than we see it. For us, between Amsterdam and Utrecht is already too far. I just spoke to the president of Twente University, and we all think it's halfway to China, though it's only a 2-hour commute, which in San Francisco would be quite normal. New York doesn't even get you get you out of the state. So that's good, to understand that, we have to work much more with, clusters in neighboring clusters like, IMEC and Ghent and Leuven, just to begin with, in terms of semiconductors and biotech. But now with Paris being, after Station F came along, and Macron has been really forceful in putting France on the map. We've seen that actually much more collaborations are happening now, also with France in terms of quantum computing. So we have a collaboration between the Netherlands, Germany, and France in quantum technologies. London will always be like the strongest, or has been for a long time, the strongest concentration of venture capital funds, and with Cambridge and Oxford around, also very strong in biotech and other sciences. So is a logical partner. So we hope that if we can kind of normalize the relationships again, that we can really talk about this European cluster, and so it could work. I think it would help if it's like is more themed based. So who does what in which kind of value chains, because where we're all lacking is in the whole digital infrastructure. I mean, that's basically where the US is really beating us. But if you talk about material science, if you talk about a lot of the kind of hard science, deep tech, energy, of course, we have very favorable climate regulation that pushes innovation forward. So there we're better, and if we can collaborate more on that and put our resources together and our capital together, then we can be a winner.
Digital infrastructure, you're talking mainly about compute and cloud.
Yeah, compute and cloud, but also everything that was built on top. So all the platforms we're completely dominated by American platforms that are basically sucking our data and giving them a great advantage, because one day they have so much more capital for us to spend. I mean, a Meta or a Google can easily develop a whole quantum computing department and spend so much more than any company in Europe would. So they can be much faster in their deployment than we are, and that gives them a huge advantage. And then they have the data as well. So on a number of inputs, they are just have a very strong starting position that is hard for us to beat there.
I think COVID was a good example, actually, you mentioned earlier, because Europe already competed at a much closer level in terms of pharma. But then you also then had this German, incredibly innovative company that had received state funding from Germany. It had been venture-backed and developed this vaccine that we had the manufacturing capacity for, that was able to be rolled out very quickly, and Europe wasn't reliant on the US or anywhere else for that. But it's also
we had the same thing in the UK. I mean, the AstraZeneca vaccine was delivered, was created from a spin out at the institute at Oxford.
Yeah, we had Johnson & Johnson, which also came from, which actually, wasn't it the Prime Minister, Boris Johnson, who wanted to raid the Netherlands?
That was not something that came up in the Science and Technology Council, although he was the Prime Minister at the time.
When New Palo Alto came really close, we basically start shopping at your neighbors. So.
But it's a cautionary tale, because we had that infrastructure there for pharma, but we don't for lots of other areas. So that's kind of...
and also, I mean, if you look at autonomy, we actually, the production of medication, of vaccines, we completely outsourced. So all of our production facilities in Europe that used to be also government owned were basically sold off to Indian or other Asian producers. So we suddenly saw that we were good at vaccine design and medication development, but we didn't have any production capabilities, and so that was a wake up call. So I think that's COVID has done a lot to make us realize where we have built where we have weaknesses and where we should really build capabilities again.
But but still, before we moved on, do you see it actually happening that we would actually get this infrastructure built in Europe? Can we get our own cloud infrastructure, computer infrastructure, everything that we ostensibly need for the proliferation of our own sort of ecosystem?
I mean, on a personal level, I'm repelled by military terminology, but I find it quite helpful to sort of think about, even in the AI era, to think about World War I in AI started let's say in 2010 with the sort of the emergence of deep learning, and let's say 2025 is the end of World War One. And then World War II in AI is 2025 to 2040. And if you look at every element of the stack, specialized semiconductors, energy, compute, hyperscale compute, frontier labs, talent, data, application layer, UK or Europe has kind of lost on every single aspect of the stack. Maybe there are one or two companies, including Mistral, that's playing in the frontier lab space. You know, when it comes to specialized semis, I mean, obviously there's ASML, you know, the infrastructure of the infrastructure, but, you know, SoftBank now owns ARM. We've got no hyperscale compute. What we do have, which we can, you know, still have deep strength in my view, in World War II, is talent. You know, and I think New Palo Alto has incredible clusters of talent. In fact, a lot of the best frontier labs are actually either in London or Paris, including for the Meta and Google. You know, Meta's lab is in Paris, Google's lab is in London, it's DeepMind. The data, I think, is a really interesting question to talk about when it comes to sovereignty, because, you know, we do have sovereign data assets. I mean, that's something, you know, with the UK government, I've spent a lot of time on is sort of sovereign data and AI. But to go back to compute and to go back to semis, you know, one of the things I feel strongly, having been in this sector for 35 years now, since the early 90s, is that, you know, some waves are so big, like semis is a big enough wave that, you know, we have collectively been investing in semis since the early 70s. So it's a 53-year-old wave, and there's still innovation happening in semiconductors. You know, one of the interesting things for me about compute is that compute is very much dependent on semiconductors at the moment. But, you know, there are opportunities not just with quantum, but with photonics to kind of reimagine compute in the next 5 to 10 years. So it may be that the winners in hyperscale compute in World War II of AI are not today's hyperscalers. Now, they are most likely to be today's hyperscalers because they spend an enormous amount on R&D, and they're looking at quantum and they're looking at photonics, but it doesn't have to be that way. So I think, you know, this is where we do still have opportunities in the next 15 years, but we have to be realistic about where we are today, which is kind of, we pretty much lost everything.
Great. So, but does that mean that you're saying that we don't necessarily need to build our own infrastructure, the conventional infrastructure?
I think the question is, can you rely on the people who are supplying you with your infrastructure? And what I would worry about, and I think actually there's a brilliant example, I think it's Aldi. Is it Aldi?
Yeah. No, Lidl.
Lidl. So, you know, Lidl concluded that if your only choice is for computer American, or American, because you couldn't use AliCloud, although there's quite frankly no reason why you can't use AliCloud. I mean, Israeli security forces use AliCloud because, you know, just like any other cloud, it's secure and you can run secure algorithms on it. But, you know, it's not politically palatable. So, you know, Aldi conclude.
Sure,
do you want to tell this the story?
I know that
because I think
they build their cloud for their clients, and then a bit like AWS was basically just a cloud infrastructure for Amazon. So and this actually, I think I love this example because we you hear governments about building data centers, which is not going to create a cloud company, and then we look at would it then be SAP or Gaia X, which was a project by the telcos. They're not going to do it, but a little because they just need, we have our customers and we want our customers to be served. And then now we see that SAP is using them.
Yeah, they wanted to control their own data. They wanted sovereignty of access, so they built it, and now they've opened it up to others.
Yeah, you can do it. Yeah.
So, I mean, I don't think it's impossible, but I think what we're talking about with hyperscale compute and cloud is sort of the last 15, 20 years. What I'm interested in is like what are the digital infrastructure layers for the next 20 years? Because those are areas where we can seek to compete, or at least seek to diversify. I'm not suggesting we should not have digital infrastructure from America or from China. I think for me the biggest lesson that most of the innovation economy learnt over the Silicon Valley Bank weekend was something that my 10-year-old son understands, which is you don't put all your eggs in one basket. Yeah. So, you don't put all of your compute on American compute, or you don't put all of your compute on Amazon. You distribute your compute. So at a minimum, I would imagine, and this is why I think companies like Mistral have a future, is that no one wants to just buy their AI from America or China. Yeah. You want diversification in your supply chain.
And the little example is or Aldi, but is quite exceptional. We also have cloud providers like Nebius, which is now Dutch Israeli. They of course are former Russian. We have a very strong team, are present in the US, all across Europe, and so we can also start using those. I mean, and they're very AI specific, so very well positioned to become a major player, at least in Europe, but maybe also globally. So they're just behind, but they can pick up. But then it also just helps looking back a bit. Where was Estonia when the wall came down? Where are they now? Look at London. I did a report when I was working at Rand Corporation for the UK government, where we were benchmarking the UK. This was 2002, I think. It was at Booz Allen Hamilton, and we found that that the UK was really backward in terms of innovation and investment in infrastructure, and then subsequent prime ministers actually prioritized this, with the Chancellor Osborne as one of the pretty strong proponents of tech. And you see where it got London, because it had a massive infrastructure with Oxford and Cambridge around, and the universities in London itself, and the financial clout that it brings. If you look at India, where India has been going with their digital infrastructure the last few years, just amazing. Some companies like Brazil have copied that. Turkey, also the Gulf, of course, Singapore. But if you look at where Korea was in the 80s, there was nearly a civil war going on, and they managed to establish, also by industrial policy, this massive IT strength. Taiwan, TSMC is an industrial policy. It just didn't come about by itself. Actually, Philips was 26% owner of the equity of TSMC.
Let's just not.
They sold too early twice. ASML and TSMC.
This is such a story.
And but just to say that it's also a matter of not saying have we lost the war. No, we've got hopefully many centuries ahead, and you have to look at starting now and building something, and then in 10 years' time you can be right up there. I mean, London is now the second kind of best ecosystem in the world. Well, they were not 20 years ago, and it's same for Estonia. And some countries make choices. If you compare Estonia to Latvia, Estonia is right up there. Israel is the most unlikely country. If they don't have a market, they're in war. They have very, very difficult domestic situation. And look what they're producing. They're producing more. They're procuring more chips from TSMC than the whole of Europe together. So it's in terms of revenue, which is amazing. And maybe this is a statistic that can shock us, is that only 3% of the revenue of TSMC comes out of Europe, which means that we are not procuring any of the latest generation of chips, the 6, 4, and 2 nanometer, and basically even from the older chips that we have for automotive, etc. Because that revenue has gone down very strongly. We don't really play that anymore in Europe, and that's a big problem. And why does Israel still play there? Because they continue to invest. They saw tech as one of their existential sectors, and started first from irrigation and then agriculture, and then became security and cybersecurity and defense, and now it's health and it's food. It's all these areas that they've been driving through entrepreneurship, through also private investment and government collaboration. So it can be done. You just need enough sense of urgency, and then vision and focus, and then there's no reason why this new Palo Alto couldn't be a world-leading cluster.
Yeah. And I mean, the good news about New Palo Alto is, of course, that it is already doing pretty well. In fact, Orla, can you maybe go through the data that we have on that?
Yeah, exactly. So, I mean, we thought it would be fun if we were to put all of these places together, how would it actually stack up against the OG Bay Area? And it's pretty good. So if we look at the first column here, this is showing startup capital. So the sum of rounds under 15 million raised in the last 3 years, New Palo Alto is ahead of the Bay Area. You wouldn't have thought it would be ahead of the Bay Area on anything, but in this area it actually is. That massively drops off when you start going through the rounds of investment. So at breakout stage, so rounds between 15 and 100 million, we're already down to half, and then less again for over that. But still, it means that we've got good startup capital. We're funding great companies. I think one of the other standout areas here is if we look at the alumni founders. So this is founders of universities from these places that have founded a startup and raised investment. Way more in New Palo Alto than in the Bay Area. That's, though, based on where they studied, not where they founded the company. So a lot of the founders in here may have actually studied at Oxford or Cambridge or in Amsterdam or in Paris, and then gone to the Bay Area and started their company. So we've got some of the right ingredients. Clearly, we've got some of the talent who are able to start great companies. We've got the startup capital, but where it comes to scaling those companies and then where it results into enterprise value creation, which is that first green column there as well. That's where New Palo Alto is not up to a scratch yet. But I mean, some good signs in there.
But then again, we can say that New Palo Alto per se is much younger as an ecosystem, right? Like we're pretty much at the starting line of the Bay Area ecosystem.
100%. Yeah. I mean, I'm old enough to remember when London tech was a bit of a joke, and the self-deprecating joke of Silicon Roundabout, because they've got a whole valley and we've got a few companies near a roundabout in East London. But yeah, it is one of the best. London's one of the best ecosystems in the world now. And if we again make that whole New Palo Alto area, Silicon Valley had a decade's head start, but we're now at a point where we're at a new starting line, and it is actually able to compete in some areas. So yeah, this is a nice bit of overlay where we look at, so Bay Area in orange, New Palo Alto, we see those strengths again in that startup capital and the university alumni.
Yeah, Saul mentioned something in the beginning when he said, who are benefiting, the teachers in the US or in Toronto, and because these are the pension funds, right? The endowments of their hospitals, of their universities, those have been investing in venture capital for decades now and have built a lot of skills as well. And our pension funds have not been doing that, and we don't have the endowments that are that active. So that's a real opportunity, and we're seeing now in the UK with the
Mansion House,
the Mansion House agreement. We have the TB plan in Paris, in France. We have now the Dutch pension funds, which are among the biggest in the world. They are now committing. I know for APG, for instance, committing at least 1% of its total invested capital in venture capital. So that's been 10% of their private equity portfolio. So that's really happening. So that means that it will add billions to the venture sector in the next 5 years. So that, and then of course it comes to having good proposition to invest in. That's another thing. We have to do much more, I think, at our universities to because that's one of the pools of potential founders, and also
case in
the
point.
repeat entrepreneurs. Making sure that it's much easier for people to go back and to stay into the ecosystem. We're seeing that happening. We're seeing these what we call the mafias, around Spotify and around Adyen and these kind of companies, and those are very, on the whole, quite successful companies. They raise faster, they grow faster, and so if we start getting that flywheel going, then that pension money can also be spent really productively, and then I think you'll start seeing a more exponential growth than the incremental growth that we've been seeing these last 20 years.
That would you feel from your position as well, Saul?
Yeah, I think if you look at the other chart that you showed there, the critical inputs are access to startup capital and access to talent. I mean, those are the two critical inputs. And so I think it would be very surprising to people to know that this area is ahead of the Bay Area on both of those two critical inputs. I still think most founders would believe that there is more early stage capital in the Bay Area than in New Palo Alto.
Absolutely.
You can stay in London, you can stay in Manchester, you can stay in Amsterdam, you can stay in Paris, and you can still have access to more, not the same, more early stage capital than the Bay Area. And, for those founders as well, as more scale-up capital, which is, as we know, a critical input that drives enterprise value, comes into the system. And this was the sort of the core advice in 2021 to the Prime Minister and the Chancellor is unless we start fixing that scale-up capital, and subsequently, we've had Mansion House, we've had Tibby, as you mentioned, we're not going to create this flywheel. But I think if you drew a day zero line, call it in 2002 for the European or the EMEA or the New Palo ecosystem, and you looked at a day zero line in the Bay Area, I would say that we're probably ahead on many metrics. So second mover advantage sometimes is really helpful because it's not as if Europeans aren't smart enough to sort of study what's been going on in the Bay Area and sort of understand. And I actually think we're already ahead on two critical metrics, arguably the two most critical metrics.
I was just going to say, if you could choose two to be ahead
No,
on.
it would be those two. And, just speaking from the point of view of both someone who was part of the original team at Skype, that was 2002, 2003, 2004. When I look at what my colleagues at Skype have gone on to do, when I look at even, before Skype, I started Love Film, what some of the Love Film alumni have gone on to do. People have gone on to build lots of big businesses, to start venture firms. And we've only been doing this for 23 years. They've been doing it for 53 years in old Palo Alto. So I think, these two data points are very important. But I think, the other thing, which I know we're going to talk about, is unless that scale-up capital comes in to the system, these companies, other than very rare outcomes, don't get to be 40 to 60 billion like Adyen or 100 billion plus like Arm or Spotify, because, scale-up capital feeds enterprise value. And if you look at, there's 150 billion plus or minus difference in the Bay Area, and that leads to like a 13 trillion delta in enterprise value. And obviously, enterprise value is a massive lagging indicator of access to capital at scale. So, to me, this is the big thing that we're going to see in the next 5 to 10 years in this ecosystem is domestic and regional capital at scale, as well as international capital at scale, and not just from the US, because there's already a large number of US players active in this ecosystem. What I'm more excited about is from Asia, because they actually think long term.
Yeah.
I was going to say on the scale-up capital point, actually, we do have a chart. I'm not sure we've got it prepped, but it basically maps for at each funding stage the likelihood of that company turning out to be a unicorn. And Europe and US track almost perfect exact line together. It's just there's less input in Europe on the scale-up stage, basically.
Yeah. I think we discussed it before, indeed. So what we also know is that New Palo Alto has a great pipeline of companies. This is also your data, right?
Yeah, so I mean, this is not. We want to look at companies beyond just kind of unicorns and like paper valuations, but companies that are building real fundamentals as well, so generating revenue. And there's over 1,000 companies that are VC backed that are generating at least 25 million in revenue, over nearly 270 with generating at least 100 million in revenue each year, which we call these thoroughbreds. So yeah, this ecosystem is creating companies of real value that are.
But I think this is sorry to interrupt, this is the other really staggering data point is that it's, I spent a lot of time talking to institutional investors, pension funds, insurance companies, sovereigns, both, in my government related role and also just, from a Phoenix Core perspective. And they are shocked when you say to them there are over 1,000 companies in this supercluster that are generating over 25 million in revenue that are VC backed. People who I talk to don't even think of these as investment opportunities. They think of them as commercial banking opportunities. So if you talk to an HSBC or a JP Morgan, they're like, these are the best commercial banking opportunities you can have. These are fast growing companies, to your point before, generating jobs that on average pay 20 to 30% more than the median. And, we are producing all of these companies without any government support, really, almost in spite of ourselves.
And very limited banking opportunities as well.
Yeah. So, I mean, just imagine if we could actually support these 1,000 companies.
Yeah.
Absolutely. And then again, moving on to the next one that is also about the value created by New Palo Alto. I mean, I think we already established that New Palo Alto is pretty much where the value is being produced, but
yeah, I mean, I suppose this is showing a couple of things. So this is the enterprise value of VC-backed companies from EMEA, which is 3.8 trillion. So we're not talking about a small segment of economies here. These are massive and central to our economies, but that New Palo Alto is 43% of that for all of EMEA. Rest of Europe, 45%, Israel, 7%, but a large and very growing proportion coming from New Palo Alto.
Right. Yeah, and that brings us again to the question of scale up capital, which we already have touched a few times. Now we can focus on it as well. So the gap. Where's the gap coming from, and how do we fix it?
Well, where it's coming from, we can see again it's at that scale up stage. So the later the round gets, the harder it is for New Palo Alto or European startups to raise at the same level as their Bay Area peers, effectively.
And then if we look at where the money is coming from for all different stages, then we see a.
Yeah, so this has also been touched on maybe, but here are the numbers. So we've done at the same buckets of round stage, so startup, breakout, and scale up. This is the percentage that comes from domestic investors. So at that startup stage, where there is a lot of capital, where New Palo Alto is doing well, 62% of that is domestic. But again, when we move through those stages, only 21% of the scale up capital being raised in New Palo Alto is coming from domestic investors. So 80% of those already pretty de-risked rounds, actually, when you're getting to those later stages, all that capital is coming from the US and Asia. And yeah, if we compare that to the Bay Area, where it's 76% is coming from those domestic investors.
You have to drill down on what's public and private. So one of the real challenges here is that if you look at France, the massive number of that will be public funding out of the BPI France.
BPI France, yeah.
And if you look at deep tech, it's nearly all public. So a lot of the funds that are investing are also public funds. So I think there's a big challenge in how we're going to crowd in much more private capital that is available, but it's not going to this asset class. And so it's not just domestic or because here. From where does it come from? For instance, in the Netherlands, a lot of it. If you look at our venture capital industry, only 30% of investments from the Dutch funds actually going to the Netherlands. The rest is going abroad to Europe.
Mostly Europe, I guess.
Yeah, so most of these funds are actually European or DAC Nordic funds, Benelux. So a lot of money what's coming in is actually from Europe. But if you look at certain categories, it's nearly 100% publicly funded, and that's I think that's worrisome, because the real growth capital will not come from governments. And you, for instance, if you look at the quantum area, just to make a comparison, in the Netherlands, our best companies have raised 20, maybe 25, 30 million. Similar companies in France have raised 100 million, but they are also products of this BPI system. But if you look at Psi Quantum from the US, raises $1 billion. So it's just an order of magnitude different, which allows you to think about building a full quantum system and integrate, and who is later going to procure all the components in the Netherlands or France is probably going to be the US or the Japanese or the Korean alternative. I think that's worrisome. So we need to attract much more private capital, and that's where the pension funds come in, and that's, I think, where we are now building good propositions for them to invest. And we hope that we see that this graph and the graph about between public and private will considerably change in the next 5 to 10 years.
So were you involved in the Mansion House Compact back in the day?
I mean, certainly, I think the advice that we gave to the Prime Minister and the Chancellor predated Mansion House. We worked very closely with many of the signatories.
How long did it take?
Look, I think the overall concept has been around for a long time. I think, it's not a novel idea that domestic and regional pools of capital are underinvested in private markets or venture capital. So I think what happened in 2021 is that both the Chancellor and the Prime Minister really started to push, which in the UK is a very novel way of working from the state to the private sector. The state, as we can see, actually, it's interesting to me that both the UK and the Netherlands are lowest in terms of domestic percentages of scale-up capital. And I think if I was to be very superficial, I would say that both the UK and the Netherlands are relatively hands-off from a state perspective in terms of their commercial perspective, going all the way back to 1602 and the VOC and the invention of the stock exchange. And I think, both London and Amsterdam sort of pride themselves on being open, trading, global financial centers and trading hubs, whereas, if you look at France, you mentioned BPI, if you look at Israel, there's much more of a kind of for want of a better word, a nationalistic edge towards capital allocation. So I think, what we saw with Johnson and Sunak in 2021 was this sense that if we aren't a little bit more pushy, the £6 trillion sitting in pension funds, insurance companies, and cash ISAs, so there's 700 billion just sitting in cash in the UK, is just not going to go into our innovation economy. So I think it's been incremental, but it's the same thing you see everywhere is, you need other people to be not leading by example, but sort of doing things that encourage you to follow in the same way. And I think, Tibby was also very helpful to Mansion House.
Yep.
So I think all of these initiatives are helpful to one another. But, as you said, underneath the headline, there are worse headlines, which is, like in deep tech, in infrastructure,
all the first of a kind facilities, these things.
But again, I actually think those are better opportunities for the pension funds and the insurance companies. When I talk to our domestic LPs, like the Mansion House signatories, Legal & General, Phoenix, M&G, etc., they are much more experienced investing in infrastructure and real estate than they are in ventures. So the idea that when a company gets to a certain size, we're investors in a low orbit satellite business in Oxford. When it gets to a certain size where it's manufacturing and assembling satellites, when it's launching them, when it's putting them into clusters, it doesn't just need venture capital. It needs advanced manufacturing facilities.
Actually, and this is one of the big challenges, is that, especially in deep tech, the financing itself becomes pretty innovative. So you have to have experience in blended finance, which we don't really have. So, and for a founder, it's pretty hard to figure that out. And if you look at the companies, the case studies of companies that have been successful, they've often had a very good CFO or a CEO that was very financially astute, because they managed to find all the kind of ways to fund their companies, and those are relatively complex structures, and that we should be able to.
We're talking about between London and Amsterdam, the two most innovative. Let's figure it out. Should we figure it out?
We should figure that one.
Let's figure it out.
And on this graph is a bit, this also has to do with borders, right? So everything is foreign. In the Netherlands, a Belgian fund would be a foreign investor, whereas a New York fund investing in the Bay Area would be seen as
true. But you can also
domestic,
see where it's all coming from. You can also see where it's all coming from,
Yeah,
and there's a whole lot of US funding in New Palo Alto.
So a bit more of a breakdown. So even at that scale-up stage, again, if you were to include cross-border between Netherlands, UK, Belgium, France, it's still only 31%, and more is coming from the US.
Why does Japan have such a big
SoftBank?
Of course.
But US is also US is not California, is not the Bay Area, and these are not Europe, right? So US is actually California, and specifically the Bay Area, is a very special beast in the total of the US, and even it's very hard to even compare it to New York. So I do think.
But I think a lot of these capital sources at the scale-up stage are coming from New York and Boston. I mean, it's Insight, it's Fidelity, it's Coatue. I mean, they have San Francisco offices, but again, it's New Amsterdam and New York. It's, the derivatives of London, it's the UK and Holland. I mean,
Boston is Irish.
We should be working together more on this.
Lincolnshire actually is named after.
Would you like to add Boston as like a part of New Palo Alto? Overseas
there's a
New
lot
Palo
of
Alto.
good things going on in Boston. Fidelity,
Absolutely.
Wellington. There's a lot of good late-stage investment happening in Boston.
But then, so the question is, and again, this comes back to your experience with government and advising the government. So what is, in fact, standing in the way of crowding in this private funding? We've been talking about this for quite a while now. I've heard these conversations for like a decade at least. So like, why is the money basically still not there, and what does it take to get it?
Well, it's only a decade. So, and also pension funds, it just takes a while. I've been at this for about 8 years, where first the pension funds didn't want to talk about it at all. Some of them actually were in venture capital much earlier and got burnt and have deep scars that keep them out of venture capital, and sometimes private equity. This also has to do with reputation, because, you pension fund our biggest pension fund represents civil servants. They are not known for being very high risk taking people, and so a fund like that wants to represent their pensioners.
Neither are Canadian teachers. I'm sorry.
No. So
or Danish nurses, but
they have other priorities, and it takes a long time for them to first see that that this asset class is actually producing superior returns. That's the most important. But then they say it's too small. Because even if it's a vastly superior return, if it's still like 0.1% of your portfolio, it makes no impact. And if it costs you 4 times as much as an investment in a big real estate deal or in the stock exchange, then economically speaking, it makes no sense. So now we're seeing that the funds are much bigger, the returns are much more stable, much more predictable. There are other kinds of instruments they can invest in that can spread across venture capital funds. So there's a lot happening now. The deals are much bigger, the companies are growing faster. So it's become much more interesting for these investors. And so 10 years is nothing. If you're looking back, if we're looking back 20 years in 2035, we'll probably see that this was the defining moment where a lot of the venture capital money started to flow into venture capital. And I hope by then they will decide that it was actually a good choice that they made, that we haven't been burnt.
But I think not just venture capital, I think there's the blended finance opportunity.
Yeah, absolutely. No, your point was really...
and I think the other opportunity, if I was, the CIO of one of these big allocators, is the fact that a lot of the US endowments, particularly those that have some of the most interesting venture portfolios like Harvard and Yale, are going to be selling down because their balance sheets are under enormous stress. So it's actually an incredible time to be a buyer. And the data, it's not that the data didn't exist. The data now exists and the evidence exists. There weren't 1,000 venture-backed companies doing over 25 million in revenue 5 years ago or 10 years ago. So I think, this is why, with all of the negativity, I completely agree. This is just an incredible time to be in this ecosystem. And we talk in our business about it taking 20 years to get to the starting line. And it's actually the next 20 years are the most interesting. And if you want to invest in a red ocean like the Bay Area, by all means, allocate a decent amount of your capital there, because there's still great innovation, but this is still a blue ocean, or at least a green ocean.
Yeah, no, I agree. So before we have to wrap it up, I also wanted to make one point that was, I think, mentioned by you guys before. So a lot of these pension funds allocations that do exist at this point, they mostly go into deep tech or impact investing. But then a whole lot of companies that we saw on those graphs are operating in totally different markets and totally different verticals. So is this actually a problem? Are we going to see this change? And is this something that needs to be sort of dealt with heads on?
I mean, well, as Saul mentioned, I think there are certain needs or capital instruments, investment instruments that are very well suited for pension funds or these larger allocations. I think our pension funds basically see it a bit differently. They are pressured to do more in impact. That's true, but they see impact in 2 ways basically. One is climate. And there they can invest in anything. So it can be wind parks, big solar parks, all these kind of things, nuclear installations, all those things, and spend a lot of money with much more project financing, etc. And then another part of they define impact is what they call a risk capital, and that for them goes across all venture capital funds. So it can be specialized, it can be deep tech, can be general funds, and just because it's we identified it together as there needs to be more money for innovation, and it's best allocated through venture capital. So giving or investing in venture capital will deliver impact. And that means that that is for our venture capital or our pension funds, and the biggest pension funds, as I said, will allocate more than $1 billion in the coming years, and then there are a few others that will do similar amounts. And if you're talking about the Netherlands, which had 3.5 billion in venture capital last year, then suddenly you'll have more than a doubling or a tripling of that amount probably happening in the coming years.
Yeah. No. So.
Now, all I would add is that if I just look at our own portfolio, we've got nearly 50 companies doing over 25 million in revenue, 26 doing over 100 million in revenue. Of the 26 doing over 100 million in revenue, 11 are fintechs. And I know fintech is unpopular, but I would argue that digital financial literacy and financial inclusion has a massive societal impact. So, lowering the cost of access to financial services, making it easier to save money, invest money, these are sort of economic growth engines, not just in Europe, but in Africa as well. One of our portfolio companies, M-Kopa, is active in 5 African markets. It's doing nearly $500 million in revenue. And it's bringing people who had literally no access to the economy.
Similar.
But I also see it with teenagers, with young people, with small businesses. If you make banking easy, if you make investing easy, if you make saving easy, this is called economic inclusion.
Yeah.
Now, we don't talk about fintech as an impact sector, but it is.
But then the question is whether the pension fund capital allocators would look at it the same way and would
they have to decide how to invest their own money. But at the end of the day, you can take a values-driven lens on any sector. And when I look at some of our fintech investments, whether it's Monzo, Wise, Tide, etc., these are all companies that have made it easier for small businesses and individuals to save money and to be more economically active.
And if I look at it purely from a lens of an ecosystem, I would be happy if much more money goes to fintech. Who is the next generation of investors? I mean, we've seen this now. All the alumni of Adyen are investing in other companies, and they don't invest in. Of course, they invest in fintech and payments because they're just payments people. But they're also investing in new proteins. They're investing a lot in health tech, cancer research. So there's just so much spin-off of that. And it's the way it works. That this is something that I try to kind of communicate to our government too. Do not kind of segment into this is good tech and this is bad tech. The pizza couriers, the last mile delivery. That's that's not interesting. Or e-commerce is not interesting. It is interesting because if you have unicorn companies in that space, those founders and their employees that have stock options, they will start reinvesting in other categories. And that's what happened in Silicon Valley. It's happening in every ecosystem. And first, the money is made in fintech, made on platforms, made in e-commerce, and then it's invested in other categories. And you see more specialized venture capital funds coming up. And so it is. If you want to have a sustained development, you have to. It takes time. It takes time for the money to go from these very high value companies to the more complicated ones. And also what you need to understand is that the capital deployed to a deep tech is about the same as for a fintech. It's just that the money comes at a different time. So you have much more capital allocation at the beginning when it's much higher risk. So it's more difficult venture capital play. Maybe it's not even a real venture capital play because you have to deploy when the risk is really high, but then when the scaling starts to happen, you can actually bank financing it, and that's not the same with venture capital. So you need a lot of capital to finance that growth, and if you look at over the whole period. That the company is attracting capital, the amounts are about the same. And then once you've got an established deep tech company, it actually has an opportunity to run much longer. It's much more embedded. So also for governments, an interesting investment to make. So every one of those has an important different risk profile, different capital needs, and for pension funds they might fit into that or they fit in the other. We also saw that the pension funds that, for instance, that are handling the staff of the employees of ASML, they were pressuring their pension funds to start investing in venture capital and in these high-tech sectors because they were not. So you're seeing actually demand so they chose that sector. They go for deep tech. Why? Because they can communicate to their pensioners that we are now investing in the next generation of ASML and your kids will also have these kind of employment. So everyone has their story. But I do think the appetite for venture capital among these institutional investors is now at a level where we're going to see much more allocations in the coming 5 years.
Okay, this is a great thing, and I think this is a great place to wrap it up. Thank you so much, Saul Klein, Constantijn van Oranje, Orla Browne. Thanks a million for joining the Dealroom video podcast. And good luck with everything that you're doing.
Thank
Thank
you.
you. Thank you very much.